Hey, so I want to take a look at XLB. This is the materials sector. Last time we looked at this, so what we're going to do is go over some news and then go into the technicals. Not much news, but I'll share what I found. Uh, Before we get to that, though, just to catch us up from last time, uh, on May 31st, so about a year, 1 month ago, it was trading at 75. We had buy points noted at 65, 73, and 77, with resistance points at 84 and 88. This one, we noted it was fair value, meaning I felt like it was appropriately priced. So, not necessarily a good time to buy, but also not a bad time to buy. We also noted that the average yearly return for this one's between 3 and we'll just round up to 6% annual return. Also, long term uptrend on this one, but it seemed to be consolidating between 67 and 88. And that kind of makes sense just looking at 75, marking that as fair value. That's right in between that range. But we'll get into the technicals and see what needs updated there. Uh, so let's just start with some of the news pieces that I saw right here. So this is the article, the only article I really came across, and this just is meant to kind of give us an idea of what's going on with the materials in terms of why we would buy it or why we would avoid it. So I highlighted a couple things here. We have companies in the sector enjoy a degree of demand stability. So that kind of is in line with that note we had where we see continual annual return of between 3 and 6%. So that kind of checks out there. This is apparently a portfolio hedge. So it provides investors with a partial hedge against cyclical holdings, for example, semiconductors, often outperforming during market downturns. So let's just pause for a second here and let's look at the technical. So during downturns, well, this was a big downturn, and I mean, it dove like everything else. I would say that's kind of true though, because I feel like a lot of companies saw a very big pullback in this area between like basically the second half of 2022. Most companies did see a dive. This one did also, drop lower, but it doesn't seem like it was affected as much. I'd have to see a side by side to kind of confirm that, but just based off of memory, this one doesn't seem like it dipped as much. Jumping back to the news, though, um, of economic instability with higher inflation and interest rates, material companies withstand difficulties with solid dividend growth and healthy cash flows. Um, that's kind of the environment we're in. And so that's the good news. If we were to take it to that next level, pick up shares of a company within XLB, and just we can actually look at who's in XLB. So right here, we have back when we last checked on May 31st, all the way to July 3rd here. Uh, the main holding is Lindy, which I do think we have at least one share. I know we follow them, so I'll be looking forward to an update there. But these are the companies that are making up XLB, and so whoops, going back to the note here, those types of companies withstand difficulties with solid dividend growth and healthy cash flows. So looking back at those companies, I would think that would make sense based on that. Uh, of course, some of the risks here, we have material companies face periods of rising costs that can crimp earnings, especially if they coincide with falling commodity prices. That kind of makes sense. We saw prices go up, when wood was a big shortage or something, We also saw this with lithium. I don't know if this would impact lithium per se. Uh, I mean, it should though. So yeah, we've seen peaks and valleys. Also mentioning how supply chain disruptions, rising fuel costs, and machinery maintenance can cause significant challenges. They even give an example here. Shipping snarls in 2021 saw the benchmark price to ship copper in the U.S. reach its highest level. So that's why we saw a little uh, increase in costs, which of course leads to increased costs on us and the company as well. Certain industries within the materials sector, such as mining, are heavily unionized, so this is another risk for us, increasing the risk of industrial action that can temporarily suspend or reduce operations. So in 2021, this is their example, iron ore mining giant Rio Tinto Group, uh, this is a new company to us, had to reduce one of its mines to 25% capacity for several months due to a strike. Which union officials claim cost the company around $5 million a day. So, again, we are in Lindy, but as long as we follow with them on a somewhat decent basis, once a month would be ideal. We'll be able to find these moments without too much delay. Of course, there will be timing. Unless we'd followed it every day, that's the only way we'd truly be able to capture the moments. But once a month, that should be plenty. So, again, just to check back on this, these were those companies, and for their top 10 holdings. And again, we follow Lindy. If I were to pick two others, it would be this Air Products Chemicals, only because it's second place, and that's kind of how I pick. I take the top two pretty much no matter what, because they're going to have the highest percentage allocation in a portfolio. And then I like to take one of these other mid-tier players between like 5 and 10, or the lower the better. And I just happen to live in a city that has a big PPG industries in its in its location, so I thought that'd be a good one if I were to pick it up. Currently I don't. These 10, though, between May 31st and where we are today, not much has changed except Ecolab jumped Corteva, but overall the percentages, nothing changed in terms of the percentages, more than 1%. Lindy's probably one of the higher ones, where it went from 20%, like on the nose, up to 20.6%. So if we have Lindy, I'm imagining it's probably went up a little bit between that month. And then the other change was Nucor jumped over Newmont, but overall they're very similar. Nucor was 4.1 and now it's 3.9. So very small differences with everything. Going back to our tracker, so again, last time we looked was 531. So let's pull up the technical chart and see what's going on over there. Let me get this out. Okay, so let's zoom into today. 75. So last time we looked was right in here, actually towards the very bottom. If I zoom out, we noted 77 because that seemed to be a spot of support, so that happens to be that green line. We also noted a buy point of 73, so that's right around in here, this light purple line. Hopefully that's visible on the screen. And well, ever since then it's gone up, straight up to 83 right now. Hardly any hiccups. It's, there is that 1 week where it pulled back a little bit, but otherwise it's going straight up. I think we're likely going to run into some resistance here at 84. It's already, that was a decent day for Monday, considering it's the end of the day, Monday, end of the trading day. But yeah, I think it's going to struggle at 84. And again, I'm just basing that off the fact that all-time highs were 89. You can see it here. That's that black line. But once it struggled to get over 84, and most recently, back in like February to March, it's just struggling to get over it. Even going back into 2021, where it did go above that mark, it it only went over it by about $5. So I just think it was overpriced. And so if we just zoom out a little bit further, hopefully we can see what I'm going to do here is I'm going to make that light purple a goldish color. So I'm going to remove this uptrend. Yeah, this was in a very high uptrend, but that is just, it's gone now. We've been trading sideways for a very long time. Yeah, this was just to note the uptrend in the first half of 2021 and 2022 for most of it. Ever since then, yeah, we found this range between 67 and I would say 84. Truly, it's 88 if we want everything, but to get probably like 90% since what? Since end of 2020, it's been in this range. What's nice is it's kind of falling in suit with our gold line. The gold line, we're saying that started, and I'm going to update the notes as we go along here. But this golden uptrend, that's pretty much been in effect since, I could make the case, since about June of 2012. So I'm just going to update that. Long-term uptrend since 2012. Whoops, 2012. We also have this purple line. That was the uptrend that we kind of saw going back to the beginning, about 2000, late 2000, all the way up till about October of 2020. Ever since then, it's just been going up at a higher clip, and that's why we put in this gold line. And then once we looked at that, we saw that this secondary uptrend kind of took effect back in about May of 2012. And so that's why we're gonna stick with that, because I mean it's been more or less in that track for about 10 years. So I feel like that's enough weight that it holds rank. And so what I'm gonna do, I'm gonna leave in the purple line because it may pull back into that range, but yellow is the dominant one right now. So yeah, I might delete that purple at some point, but I'll leave it in for now. So currently, let's just update real quick. Currently it's at 83, so it's gone up $8. If I were to buy this one, my buy points for this are currently 77. So we didn't buy last time. I didn't mark it that we bought, but 77, and what's this? 73. So what we're gonna do is I'm gonna take out 65. We'll leave 73 and 77. I'm gonna make 77 bold. So next time it comes close to that, I probably will pick up a share of this. In terms of resistance, 84 is kind of strong, and then 88 is actually that black line, not 89. For this one, 84 seems to be a more resistance, a greater resistance point for this one. So overall, it's going to get updated to red, which is meaning it's at resistance. I'm going to look elsewhere for something. We'll update the date here. And then just to recap on the notes, so average yearly return of about 3 to 5.7%. I think why I have the two figures is I think the purple is the 3%, but the gold is the 5.7%. So that might get updated, but that's still true because nothing's changed in terms of those uptrends. We have long-term uptrend since 2012. Yep, we added the 2012 and consolidating between 67 and 88. I'm actually going to change that to show it's consolidating between 77 and 88. Okay, so here's just the the recap of what we did here. So XLB, currently it's at 83. I would first buy this one if it pulled back to 77. So nothing, not a big difference. And again, we're going to keep in mind the average return, so not that great. So even if it was at 77, I'm not going to buy much, even if it is at the buy point I want. Even if it pulled back to 73, I probably wouldn't load up on it just because the average yearly return is not that great. But chances are I would add 1 or 2 shares just to kind of build out a very conservative piece of my portfolio. But again, we're playing aggressive. We want 25% return, 20 to 25%. This one clearly doesn't fit the mold. So ideally, it would be I buy like 9 aggressive stocks that I believe in, and maybe 1 or 2 of these conservative things that I know that they're just going to slowly build up over time. But yeah, again, just to recap, currently it's at 83, buy points at 77 and 73, but 77's the point of interest. Resistance is at 84 and 88. 84 is the point of interest, and it's at 83, so gonna hold off on this one. Again, average yearly return is between 3 and 6%. Long-term uptrend since 2012, so long-term we're okay. But overall, it is consolidating between 77 and 88. So I want to see a pullback closer to the 70s. But that's it. So if you have any questions or want to add any insight that you're aware of that I didn't share, please feel free to do that. Otherwise, please like, subscribe, and I'll see you on the next one.